Real estate finance with development lending, navigating the complexities of financing real estate development. Presentation overview, real estate finance and development lending fundamentals. Introduction to the basics of real estate finance and development lending, including their sources and financing structures. Types of development lending, diving into different types of development lending and how they are used in real estate projects. Key partners involved in development lending, examining the key partners involved in development lending and how they contribute to the success of a project. Real estate finance basics, sources of capital. Real estate financing involves understanding various sources of capital, such as equity, debt, or hybrid capital. Each source has its own pros and cons, and the financing structure depends on the type of real estate project. Financing structures. Financing structures are used to fund real estate deals. Depending on the type of project, these structures can be simple or complex and can involve multiple sources of capital. Common financing structures include mortgages, mezzanine loans, and joint ventures. What is real estate finance? Real estate finance is a field that involves raising and managing capital for real estate projects. It encompasses various sources of capital, including debt and equity, and how they can be used to finance deals. Sources of real estate finance. Bank financing. Bank financing is one of the most common sources of real estate finance. It involves borrowing money from a bank to purchase a property. Bank financing may have a lower interest rate, but it can be difficult to qualify for. Private lenders. Private lenders offer alternative financing options such as hard money loans or crowdfunding. These options may have higher interest rates, but they can be easier to qualify for and offer faster funding. Government agencies. Government agencies such as the Federal Housing Administration and the Veterans Administration offer financing options that may have lower down payment requirements and more flexible credit score requirements. Development lending types. Land development loans. Land development loans are used to finance development of raw land into a construction-ready site. These loans typically cover the costs of site preparation, such as grading, utilities, and road construction. Acquisition and development loans. Acquisition and development loans are used to finance the purchase of land and the construction of improvements like buildings, roads, and utilities. These loans are typically short-term and require a much larger down payment than traditional mortgage loans. Construction loans. Construction loans are used to finance the construction of a new building or the renovation of an existing one. These loans are typically short-term and require periodic inspections before funds are released to ensure that the construction is progressing as planned. Land acquisition and development loans. Purpose of AD loans. AD loans are used to finance the acquisition and development of raw land and cover expenses like zoning permits, land surveys, and site preparation. Benefits of AD loans. AD loans are typically short-term loans that allow developers to acquire and develop land quickly, enabling them to start construction on new projects sooner. Mini-perm loans. Loan for real estate construction. Mini-perm loans are an excellent way to finance the construction of a real estate project. It is a longer-term loan that provides developers with the flexibility to pay for construction costs over time. Refinancing or selling. Mini-perm loans are ideal for developers who want to refinance or sell their property once the construction is completed. It provides them with the flexibility to pay off the loan at their own pace. Capital partners in development lending. Equity partners. Equity partners provide capital investments in exchange for ownership or equity in a development project. They often take a significant risk, but also stand to gain significant returns if the project is successful. Debt partners. Debt partners provide loans or other forms of debt financing for the development project. They're often less risky than equity partners, but also provide less opportunity for high returns. Government partners. Government partners provide financing or other forms of support for development projects. They're often involved in infrastructure development or other public works projects. Equity partners. Equity partners are investors who provide capital in exchange for an ownership stake in a real estate project. They're typically involved in the project from start to finish and have a long term investment horizon. Mezzanine partners. Mezzanine partners provide risk capital for real estate projects, bridging the gap between equity and senior debt financing. They typically have a shorter term investment horizon than equity partners. Conclusion. Real estate finance is a complex and multifaceted field that is crucial for the success of any real estate project. Developers must understand the basics of real estate finance, different types of development lending, and various capital partners to make informed decisions and structure deals for maximum profitability. Thank you.